And we'll get started. Well, hello everyone. This is going to be a webinar on land rental rates, and we're going to focus on central Minnesota for this workshop here this morning. I'm Nathan Hulinsky. I'm with the University of Minnesota Extension. I'm out of the Brainerd office, and you can see my contact information is on the screen here, both my email and my phone number. Here's an agenda that we'll be walking through today. You can see we'll go over some rental rate trends. We'll walk through some crop budgets. We'll talk about some FinBin data, land values, and then we have multiple worksheets we'll walk through for both the landowner and the farmer. And then we'll talk about flex rent and negotiations at the end. So the first helpful resource that I will like to share with everybody is the University of Minnesota Extension's website. So that red hyperlink is the actual website. That blue link below that is just a shortened link, easier for people to type in, z.umn.edu/LR25. That will bring you to the most up-to-date land rental information that we have. And this is what our website looks like. You can see we have farmland rental rates at the top there. And if you click on the cropland rental rate bucket, that little plus sign, it'll break down and open up into a alphabetical county list for the last 3 years of both the FinBin data, and then also we highlight the USDA average numbers. So the information is easy to find and readily available. So we try to make it very easy for anyone from the public to go to our website and find this information. There are two main data sources for county-specific land rental rates. The first one is through the FinBin database. And the FinBin database is managed by the Center for Farm Financial Management, which is part of the University of Minnesota. It's in the Applied Economics Department, and they do collect this data. The data is collected directly from farmers who are enrolled in the Farm Business Management Program across the state of Minnesota, have their data anonymously updated into this database. And the Center for Farm Financial Management cleans up the data, makes sure it's accurate before it's published. And this is what it looks like. So I will focus on Wright County for my specific examples today, but we can see Wright County on the bottom here. We have 21, 2022, 2023 average FinBin number. So we jump from $164 per acre. These are all per acre numbers. And this is specific for dry land as well, non-irrigated. Into 2022, average land rent in Wright County dropped. Actually, about $9 per acre. Into 2023, we jumped up, about 10% there, or a little higher even. We're actually jumped about $25 an acre. Into 2024, we can see Wright County specifically jumped another $10 per acre. A lot of the other counties in central Minnesota decreased from 23 into 2024. The 2024 numbers for Wright County, we can see are broken down between the average, the median, where the median is just the number right in the middle. The 10th percentile is the bottom 10%. The 90th percentile is about the top 10%. So that's kind of the range we see within the county. And in Wright County, our bottom end there is $137 per acre. The higher end of the spectrum at $274 per acre. That's all FinBin data. And approximately 10% of all corn and soybean farmers in the state of Minnesota are in this database. So it's a very robust data set that we have. On the far right-hand side of the screen is the USDA numbers. So we have both 2024 and 2025 USDA county averages. So the USDA sends out surveys to farmers, and those are updated annually. And we have the 2025 data that's published around the 1st of September every single year. And you can see the USDA number for 2024 was $174 an acre, very flat into 2025 there at $175 an acre. The numbers are a little bit different between the Finbin database and the USDA database. They are typically very close to one another, but you can see again the USDA is a little bit lower for Wright County than it is for the Finbin database. So when I get questions via phone call or email on land rental rates, these are the numbers that I tell everybody. I do the 3-year average of Finbin numbers as well as the USDA data set that we have. So these are the two best data sources that we have for land rent. The next slide here highlights, specific to the Finbin data set, the fluctuations we've seen the last few years. So central Minnesota in the middle of the table, from 2024 into 2025, land rents jumped 16.5%. Not year over year, that's over that 5-year period, but definitely we saw some land rental increases. The state as a whole was even a little bit higher at about a 21.5% increase over that 5-year period. If we move on to the far right side of the table, central Minnesota dropped about 2% on average from 23 into 2024. The state as a whole dropped about 1% on average from 23 into 2024. The 2025 data will be published, kind of early springtime, and I anticipate kind of a similar trend line as what we saw from 23 into 2024. Land rents very flat, not much for increases. Some decreases across the state will be seen. And this is USDA irrigated and pasture rent. Not every county has a lot of data. We can see Wright County does have a handful of previous year irrigated data. And we can look, it's kind of interesting to me because in comparison to the dry land prices from 2 slides ago, the irrigated prices for Wright County are very similar. Well, there's not a huge increase to have the irrigation systems up and running. That might just be the reasons for that may just be the way the data's, how much data is in the data set. The far right side here, we have the last 3 years of pasture rent. Not a lot of pasture rent data on this slide here. It is reported on a per acre basis through the USDA. So that's a per acre basis. A lot of farmers, when they rent pasture, they rent on an animal, like a per animal unit basis or per cow calf pair basis. So that number of per acre is not always super relevant when farmers are renting on a per animal basis. But this is the USDA data that is published. In the handout that I emailed everybody on the group has the entire state of Minnesota for all of these data values, not only central Minnesota. Next, I'll switch gears and talk about crop budgets. I made these budgets. The data is collected from the Finbin database that I've been talking about already this morning. First budget here is for corn. So this is specific to central Minnesota. So the 5-year average yield in central Minnesota, 185 bushels per acre. In 2024, slightly below average there at 178 bushels per acre. My projection into next year is kind of this trend line increase on yield. I put down 190. We can see that over the last 5 years, the average price has been 486. Last year, about 65 cents below that at 422. My projection into next year is $4 corn. You can see the total revenue. You can see the breakdown on all of the expenses. Most of the expenses from the farmer's point of view are not decreasing moving forward. On the bottom of the table in the blue line, I have net income for the farmer. The 5-year average net income is about $144 per acre. So pretty strong incomes over the last 5 years on average. If we look back historically, the average net income is probably closer to that $40 to $50 per acre. So $144 per acre income is a strong number. In 2024, the average income on corn ground in central Minnesota was a loss, a negative $45 per acre, right? The parentheses means negative in the table. My projection into 2026 is unfortunately also negative. I have a $50 per acre loss on corn ground. At the top of the table, I have the cost of production. That's what COP means, the cost of production per bushel over the last 5 years. We can see in 2020, the average cost of production was about 3.25. And into 2024, we jumped about $1.30 per bushel, and it's over $4.50. So most farmers, it's costing them $4.50 per bushel just to grow 1 bushel of corn. Same budget here with soybeans. Cost of production at the top in 2020, farmers in central Minnesota were growing soybeans at $7.68 a bushel. So a very reasonable cost of production. It jumped $2 into 2021. It jumped another $2 into 2022. And in 2024, it's around 11.25. So over the last 5 years, we've had a $3.50 increase in the cost of production that farmers spend. We can see our average yield around 48 to 50 bushels per acre, 2024 below average. Price, the 5-year average is $11.76. Last year, just under $10. My projection into 2026 is $10 soybeans. Seed and fertilizer, chemicals, crop insurance. You can see this list of expenses. I will highlight the net income line there at the bottom. The average net income over the last 5 years has been about $93. So again, not a horrible number. There's some decent incomes over the last 5 years. Unfortunately, in 2024, the net income on soybeans was a loss of $56 per acre. So again, pretty negative profits we've seen on soybeans. My projection into next year with 50 bushel soybeans and $10 soybeans, or excuse me, 50 bushel soybeans at $10 is a loss of $16 per acre. So unfortunately, both my corn and soybean budget for central Minnesota are negative. So keep that in mind for landowners on the call today. If their farmers asking for a flat or a no increase in land rent, or maybe they're asking for a 5% decrease, this is the main reason why, is that the economics of farming right now, not fantastic. One more budget on spring wheat. There's not a lot of spring wheat grown anymore in central Minnesota. You get to northwest Minnesota, there's still a decent bit of spring wheat grown. Decades ago, Minnesota grew a lot of spring wheat. And I'll just jump to the bottom of the table here. The average net income over the last 5 years is a loss of $70 an acre. So if you're losing $70 on average every year, you're probably not going to be growing that crop anymore. In 2024, the average spring wheat acre was a loss of $160 some. My projection into next year, a loss of $180 per acre. So spring wheat, not very profitable. One of the reasons why we're seeing less and less spring wheat grown in central Minnesota. So this is a Finbin annual report. So this is specific to crop farms in Minnesota and their profits. So the median net farm income per year. So just to go back and show farm incomes, starting kind of in 07, 08, farm incomes kind of picked up a little bit. 09 was below that trend line, but then 10, 11, and 2012 on the farm, really high net incomes. And if we look at that red line where it's constant inflation adjusted 2024 dollars, 2012, we had our median crop farm income above $300,000. So humongous income that we saw in kind of that 2010 through 2012 period. And then starting in 2013 all the way through 2019, the farmer income was below $50,000. So significantly lower income. And $50,000 is not a humongous income for a farm family to live off, right? The average income in the United States for non-farming specific is above $50,000. Starting in 2020, farm incomes jumped again, and 21 and 22 really high incomes again on the farm. We can look at the table here, both 21 and 22 were around that $250,000 income. So again, really strong income. Unfortunately, though, in 2023, they skyrocketed or they jumped off a cliff downwards. And in 2024, the average net income on the crop farms was a whopping $2,300. Unfortunately, 2024 is the lowest income over the last 20 years for crop farms. Okay, so again, this is one of the reasons why land rental rates have decreased from 23 into 2024, is that the income just isn't there on the farm. This is a breakdown of price received by the farmer and cost of production. So just to highlight, I just showed that 2010 through 2012 was high income. We can see in the table here that farmers, 374 in 2010 was their cost of production. They were selling it for 5.25. That's $1.50 profit per every single bushel of corn. Very high number. I mean, over $1 per bushel income is really strong. They had that 3-year window in early 2010s with good income. 2014 through 2020, we can see the cost of production and the average price received are the same, right? They were selling at break even. There weren't many profits. 2020, 21, 22, strong incomes, again, as we can see in the far right of that screen, where farmers were selling for, above $1 per bushel profit, a humongous profit. 2024, profits vanished. Here's the same table on soybeans, and we can see again that 2010 through 2012 higher incomes. It looks like 2008 on the soybean world, really high incomes as well. 22 and 23, not as high of income on soybeans as it was on corn. But unfortunately, in 2024, the blue line is above the black line, which means farmers are on average selling at a loss. This is a breakdown on actual price received by Minnesota farmers on corn ground for the last 3 years. The top line in the maroon is 23. We started the year at $6.50 corn, slowly decreased. Come harvest, it dropped even more. We ended the year at $5 corn. 2024, that bright red line, we started at $5 corn, slowly fluctuated, ended the year right around $4 corn. In 2025, right around $4 corn. Throughout the entire year, we can see the most recent data published was August, and that was below $4 corn. Same data here on soybeans, and same story. 23, we had $14 soybeans, right? Slowly dropped throughout the year. 2024, the bright red line. We started at $13 soybeans. We slowly dropped, ended the year at $10. 2025, hovering right around $10 soybeans. But for the last 3 years, our soybean price in Minnesota has dropped every single year. So unfortunately, farmer income is directly impacted by this number, and it's just becoming lower. Here's the same data, just looking back a longer price range. And you can see again, 2015 through 2020, very low incomes, right at the cost of production. We had that big run up in prices for both corn and soybeans in late 2020 through 2023, and then unfortunately they just came right back down. And 24 and 2025, very minimal incomes on the farm. Farms have two large safety nets that farmers can enroll into to help kind of protect their losses and protect their farm. And crop insurance is one of the biggest tools that farmers have to help manage risk. Roughly 90 to 95% of all acres of corn and soybeans have crop insurance. And we can see that when farmers sign up to crop insurance, the price that it would be paid out in an indemnity is set nationally. And they use a spring price and a fall price. These are based on December futures contracts for February and October, approximately. And we can see that the spring price for crop insurance was $4.70. The fall price $4.22. Soybeans 1054 spring, 1035 fall. Crop insurance will pay out on the higher of either spring or fall price. That's how the pricing mechanism is set up. The other large safety net program that farmers have as an option is the Farm Bill programs, and this is Ark County. Ark County or PLC, farmers got to choose between. PLC did not pay out anything for crop year 2024. So this is for crop year 2024. These payments are issued this fall, 1 year after harvest. And you can see in the top left, there were some canola payments, around $40 per acre for the counties that did have a canola payment. Oats payments, quite a bit smaller. There's only half a dozen counties, but there were some oats Ark County payments. And there were quite a few wheat payments, and we can see here across the state, some decent wheat payments were issued. If the county has two separate payments, like Becker County, the first one is for irrigated ground, the second one is for dry ground. So some counties have two, some just have one. If it's only one, then it's going to be the dry land payment. So some decent wheat payments were issued after the growing season of 2024. These are not known when a farmer goes to plant the crops. And the two biggest crops grown in Minnesota are corn and soybeans. And we can see here, these are only estimates. The USDA has not finalized the calculations for this, but across Minnesota, there's some large payments going out. If we highlight Wright County on the bottom right, we can see how there's an estimated about a $37 corn and soybean payment. So these payments are paid per acre on a farmer's base acres that they have. These payments will pay out on 85% of a farmer's base acres. So if a farmer has 100 base acres of corn, it'll pay out on 85 of those acres. That's how the math works for these calculations. These are only estimates, but there are some fairly substantial corn and soybean payments that will be issued yet this fall from the USDA. This is a breakdown from the University of Illinois, highlighting the darker the county, the higher the corn payment. And you can see south central Minnesota, some pretty dark counties in terms of large payments. And Minnesota is kind of the largest cluster of payments throughout the entire corn Ark County payment system across the whole US. The same graph through the University of Illinois on soybeans. And again, kind of that south central Minnesota, the largest concentration of kind of higher payments for kind of the soybean belt of the Midwest. So some large payments will be issued on both corn and soybeans, Ark County, yet this fall. These are future prices. This is out of Central Grain, out of Sauk Center. They just have easy to find published data. You can see this is as of about a week ago. Corn price there at $3.58. I highlighted that the cost of production is probably about $4.50. So farmers are probably not finding this to be profitable levels on corn ground. Soybeans there right around $10. I think that jumped a little bit in the last week, but not a significant increase. Most farmers' cost of production on soybeans is around $11. So these prices are not profitable for most farmers across central Minnesota, but this is what current cash prices are at. I'll discuss some additional Finbin data. Okay, so we can see this is the Finbin website listed on the screen. This is what the website looks like. So this is just a screenshot of the website. When I constructed those budgets right away this morning, that was a crop summary report in the top part of the screen. You can also generate a benchmark report. And this is what a benchmark report looks like. I know there's a lot of numbers on the screen, but it does break down into 10% buckets, high to low, what farmers are getting across. And this is the state of Minnesota as a whole. The data in Finbin is county level. So if you want to look at only Wright County or Wright, Meeker, and McLeod County, you can do kind of that 3-county region to get down average yields and average cost of production to see where your farm correlates to above or below average. So if we look at the top line of yield, the median is 176 bushels per acre. The bottom 10% of Minnesota corn farmers in 24 had 115 bushel corn. The highest 10% on the far right had 232 bushel corn. So that's the range we're seeing across the state of Minnesota. And this is just a continuation on. I'll highlight the cost of production with labor and management towards the bottom of the screen. And you can see the lowest 10%, or the highest cost of production 10% there was $6.92. So they had $7 cost of production, a humongous number. Whereas the lowest 10%, so the highest income 10%, their cost of production was $3.19. So we have farmers out there, even at $3.50 corn, where they're making profits. So there's a wide variation between farmers in Minnesota on the cost of production, from $3.19 to $6.92. So that can be a very helpful tool to utilize this Finbin benchmarking report just to get a grasp of variation across the state or within counties on corn, soybeans, wheat, any crop that you want to look into. The Finbin database has, I think, about 100 crops in there. Not all crops have very good Minnesota data, but there's a lot of information to look through. This data is central Minnesota specific, and you can see 21 and 2024 below average yields. I expect 2025 to be better than the last few years. Same graph here with soybean yield. Unfortunately, 24 below average yield. I expect 2025 yields to be higher. Spring wheat, not as much variation, fairly flat. Central Minnesota gets 50 bushels per acre on spring wheat pretty consistently. This is a breakdown of all of the input costs that farmers have. So this is input cost dollars per acre. The green line at the top is land rent. So for most years, land rent on corn ground is the most expensive input that farmers pay. That red line towards the top is fertilizer. Fertilizer got really expensive, especially in 22 and 23. And that's also one of their most expensive inputs. That brown line is machinery. So machinery, fertilizer, land rent, clearly the top 3 most expensive inputs that farmers pay. In the middle of the graph, that's seed cost. The bottom 2 ones are chemicals and crop insurance. Here's the same graph for soybeans, and you can see the green line of land rent, clearly the most expensive input on a per acre basis that farmers spend. It's not even close. The next expensive input is machinery, and then the bottom 4 are kind of clustered there of seed, fertilizer, chemicals, and crop insurance. Same graph with spring wheat, And again, land rent is the most expensive input that farmers have. Fertilizer and machinery are the next two most expensive inputs there, with chemicals, crop insurance, and seed being on the cheaper side of inputs for spring wheat. Next, we have land values. So it's important for landowners and farmers to understand what their land is worth. And the University of Minnesota collects farmland sales. So the landeconomics.umn.edu is a fantastic website to go through and find this data. And this is what it looks like. And I do want to highlight that to be in this data set, it has to be 20 acres tillable. So we try to weed out some of those smaller parcels, and we also try to weed out the intra-family sales where it's only arm's length transactions in the data set. I will highlight Wright County at the bottom, 23 farmland sales in calendar year 2024. So a decent bit. You can see throughout the counties of central Minnesota, it's on the higher end. Wadena County only had 3 farmland sales. Benton County only 3 farmland sales. Sherburne County only 5. So that data is a little bit harder to interpret the average when we have minimal sales. Wright County, 23 sales. The average sale price per acre in 24, $9,545. Okay, the average sale price in 2023 was $9,600. So actually, Wright County average sale price dropped about $80 per acre into 2024. Most counties saw an increase. The minimum sale price in Wright County was $6,800 per acre. So it's a fairly high minimum sale price. The maximum sale price in Wright County was $16,500. So we have about a $10,000 difference between the minimum and the maximum sale price in one county within 1 year. So it's pretty dramatic, the swings that we see in property prices. So keep that in mind. This data set's updated once a year. So yeah, it's very interesting looking at what these land sales are. And if you go to the website, you can break down per township. Not every township has farmland sales every year, but it'll break down what Clearwater Township in Wright County had for a year. I do also want to highlight the Minnesota Electronic Certificate of Real Estate Value has a website here. That's a screenshot of the website. This data set is updated roughly on a monthly basis, and it's the same data that's in the landeconomics.umn website. So if you want to see more recent, like what did land sale the summer of 2025, this website on the screen currently is updated more frequently than the university website. So just kind of a heads up. I have the link shared there for everyone to find. A question I get a lot also is the CPI index. So this is the crop productivity index. So it's a number between 0 and 100 on how productive the farm ground is. And the University of Minnesota has a map. So you can go to this website, the link is there, and you can zoom in on your farm and it'll tell you that your farmland is 85. It'll tell you that your farmland is 62, right? It's a variation. The darker the color, the more productive the farmland is. So you can see, the further south you get approximately in Minnesota, the darker the values. And as you get north and especially northeast Minnesota, not as productive soil in comparison to other parts of the state. So it can be a good indicator of, is your farm ground above the county average or below the county average? So again, this website can be helpful in determining that. Again, this is USDA data on real estate values. So the orange line at the top is inflation adjusted. The blue line is nominal dollars. So that's like the dollars that they actually spent in that year. So back in 1950, you could buy farmland on average in the state in the country for, I don't know, 10 bucks an acre. That same $10 per acre is about $750 in today's money. And you can see the run up in prices. So that same acre today is worth about 4,350 bucks. So we can see the big run up of the 1980s and then the financial crisis, the farm crisis in the 80s is where farmland lost significant value. You can see that on the screen. And then especially starting in about 2005 through 2025, farmland has increased significantly. So it's pretty wild to see the jump in farmland values over the last 70 years and especially the last 20 years. This is a map of the United States with the average per acre cropland value. I would argue that the average cropland value for each state is kind of hard to interpret. You know, it's like Minnesota's a large state, $7,000, and northern Minnesota is really expensive. $7,000 in southern Minnesota, really cheap. So there's a lot of variation, but I think looking at the percent change is pretty useful. So in Minnesota, our farmland has jumped 7% from 24 into 2025. So that's a 1 year change. 7% is a pretty strong number. If you look at this map of the United States, 7% is like the top three states of percent increase, right? We have like Michigan, Kentucky had similar increases. Utah had a large increase, but most of the Midwest had about a 3 to a 4% increase. Minnesota was almost double that at a 7% year over year increase. So pretty wild. This is the same data, just simply broken down for what the actual number is. So in Minnesota, you can see lake states in the center there. In 21, our average farmland was worth $5,030 per acre. Now in 2025, on average, it's $7,000. So we jumped $2,000 per acre just in the last 5 years on average. And that's about a 40% increase in 5 years. So farmland has increased tremendously in the last 5 years in Minnesota. And if I go back two slides, you can see kind of in the top orange from 2015 through 2020, farmland on average did decrease, but then from 2020 through 2025, these humongous increases that I just highlighted, this 40% jump from 21 into 25. I also want to highlight for, farmers and landowners to use realistic county actual production history. So this is yields per acre. So what is the expected yield on this field per acre, right? It's very easy for farmers to say, oh, I got 200 bushel corn, I got 60 bushel soybeans. Well, those nice round numbers don't always actually happen in reality. And again, Wright County at the bottom, this is USDA data for the last 5 years. We can see Wright County, the 5 year average corn yield, 175 bushels per acre. So just highlighting what is our realistic expected yield. 175 bushel on corn is all we're getting. I shouldn't say all like it's a negative thing, but that's our reality in Wright County. On soybeans, our average yield per acre on soybeans, about 51 bushels per acre. I always, kind of a side note, I think it's humorous to me that the USDA tracks yield to the 1,000th decimal place. So again, Wright County is getting 174.598 bushels per acre. So again, that 1,000th decimal point, very important. So again, utilizing realistic farm yields. From the landowner's point of view, what is a good starting point for determining what is a fair farmland rent. So the University of Minnesota has these worksheets on the website. They're in the handout that I emailed to all the participants, and Taylor handed those out at her workshop here this morning as well. And this is the landowner's cash rent worksheet. So there's a few things to fill out. The first one, farm size in acres. How many acres are we renting out? I do want to highlight putting the number of acres that are tillable and not acres owned. If the landowner owns 200 acres, but only 156 is tillable, using the 156 tillable acres for this worksheet. Farmers don't want to pay for land that they can't use into their operation. And then what's that value per acre? Right? We talked about farmland values just a few slides ago. And in Wright County, from high to low, we jumped $10,000. So it can be a little bit tough to determine what your actual farmland value is. And I would recommend, as a landowner, the counties, I just got mine last week, counties send out this time of year what they estimate your ground to be worth, what your house to be worth, and with that, their appropriate real estate taxes. And that can be a very good starting point for what your farmland is worth. So you can say, hey, this parcel ID number XYZ is worth, $100,000 and it's 20 acres. Okay, well, that's $5,000 per acre. So you can do the mathematics on what is that per acre. The counties have to be pretty realistic. They have to be pretty close. Counties are supposed to be within 90 to 105% in their estimated market values of properties in comparison to the last previous years of transactions. So counties are relatively close. They're not 100% accurate, but they're within the ballpark of what your farmland should be worth. And then back to the worksheet, row C is just the total farm value, acres times price. So in this example, we got $1 million farm. The next thing there, row D, is your desired rate of return. Historically, farmland is about a 2 to 2.5% rate of return. So if your farm ground is worth $5,000 per acre, you should be getting about $100 to $125 per acre land rent, right? That 2 to 2.5% rate of return. That is historically what we've been seeing in the farming world. So we can compare that to other investment opportunities. If you want to put that into a CD at a bank, that's pretty similar. CD rates have jumped a little bit the last couple of years. Maybe you can get 3-4%. If you want to put your investment money into a stock portfolio, you'd probably expect about a 7-8% rate of return, but that's a riskier asset than is farmland. So a safer asset typically gets lower rate of return. The next line item is your real estate taxes. Real estate taxes vary heavily across the state of Minnesota. They're dictated by your township, by your county, by the school district you live in. In Wright County, I would estimate they're going to be $20 to $35 per farmland acre for real estate taxes. Also, you might have some liability insurance. Those aren't typically super expensive. And then other cost repairs. Maybe you have to fix a culvert, a driveway, or a gate or something every once in a while on that farmland. Row D is your total desired rate of return. So your investment return plus your real estate taxes, other costs. You divide by how many acres. You get your desired rent per acre. First example here, $213 per acre. Next one, 140 acres valued at $3,500. You can follow the math. That's $115 per acre. So I think this worksheet is a pretty good starting point for a landowner to say, hey, this is what I would like to get for farmland rent. I do want to highlight, we want to make sure that your desired rental rate per acre is in line with the county average. I talked about the county averages per county per acre right away this morning. If your desired rate of return is $500 per acre, The county average is 150. Well, we got a discrepancy there, and we do need to be in line with the market averages per county that I highlighted this morning. The next two worksheets here are from the farmer's point of view, also available on the website. The first one here is how much a farmer can afford to spend on land rent. So the worksheet starts with how many acres, both corn and soybeans. Next, what is your expected yield and price? So we got 205 bushel corn at $4, 57 bushel soybeans at $10. What are your direct expenses per acre? So I think it's important for farmers to know where their expenses are. What's your seed cost per acre, your fertilizer? What's your repair bill on a per acre basis? Adding up all of these expenses and then incorporating your overhead costs. What's your utility bill? What's your farm insurance? What's your interest expense? What's your depreciation on the farm? And also operator labor and management fee, right? That's farmers' income that they get to live on. And at the bottom of the worksheet, you can take your total income, take away your expenses, divide by acres, and it'll say how much is available for land rent. So in this example, $106 per acre. This website, fairrent.umn.edu, is more or less that exact same worksheet, just an online template. It's free for everybody to use, and it might be easier to edit it within this website. And also on the Fair Rent website, you can have up to 10 plans where you can say, hey, this field, I have a little higher yield, so I want to increase my land rent as a result of that. But this website is helpful to help determining what you can afford to spend. The next worksheet for the farmer's point of view is the cost of production worksheet. So this is acceptable price, break-even point, cost of production. They all kind of mean the same thing. Very similar template to that previous worksheet. How many acres? We have 500 corn, 500 soybeans. Expected yield, expected price. Same list of expenses. What's our seed, fertilizer, chemical cost per acre? Okay, again, very similar to the previous worksheet. Same list of overhead expenses. What's our utility bill? What's the farm insurance, interest? What's our depreciation expense? Calculating all these expenses and then incorporating the family living expense. We have a $90,000 family living expense in here with 60% of that coming from the farm. The other 40% is some off-farm income. But on average, we can see here family living is about $60 to $70 per acre on the farm. So we need to incorporate this to make sure that the farm is making sustainable profits to help raise the family. And then at the bottom of the worksheet, you calculate your total income, your total expenses, divide by bushels, and your cost of production is, in this example, $5 corn, $13 soybeans. We have blank columns in here to help fill out what your own individual farm's cost of production is. And this website, this cropcost.umn.edu, is that same worksheet, just with an online template that the University of Minnesota developed. So it's easier for farmers to calculate. It's easier to edit than that Word document. But we try to make it very helpful. We try to make it very easy for farmers to determine what their cost of production is. That's an important tool when we start selling our crop to determine if we are profitable or not. The next thing we have here is flexible lease agreements. So most often in the farming world, farmland leases are a dollar amount, right? I shared that Wright County, $175 per acre on average, and that's an annual payment. It's pretty common for farmers to split that payment with landowners 50% in the spring, 50% in the fall. So the farmer will pay, $85 to the landowner April 1, the remaining $85 per acre November 1. That's kind of how the cash farmland leases work. Another option here is a flexible lease agreement. And we can see here there's multiple ways to flex the lease agreement. And the idea behind a flexible lease is that that final payment that a farmer pays the landowner is not known until harvest time. So that final payment will go up or down if price or yield are above or below average. So you can do a flexible lease based on gross revenue. So that's price times yield. You can do base rent plus a bonus. So you can say, hey, the farmer can say, I'll give you $150 no matter what. And if price or yield is really good, I'll give you an extra $20, $30, $40 an acre, depending on how well things did. You can do flexible lease on yield only. The idea behind a flexible lease is that farmers and landowners share some in the profits. Some of the high income years, landowners would get a higher payment. I've had conversations with both farmers and landowners, and a lot of the conversations lately have been that the idea sounds well, the final math of how to determine the proper additional payment gets confusing. What price to use is confusing for both farmers and landowners. And I do think that the straight cash rent lease has stayed dominant because it's more simple. I've had landowners tell me, I don't want $10 less next year, $20 more next year. Just give me the same $175 per acre both years, and it's easier, and I'm the same money at the end of the day. So flexible lease agreements can be a good tool. Determining the proper flex component and what price to use is kind of a sticky point. So you need to have that discussed prior to, otherwise it gets really complicated determining the proper dollar amount at the end of the year. So bear that or keep that in mind when discussing the flexible lease agreements. Can be a good tool. Not everyone wants to do it. Another one here is just the percent of gross revenue. If we go back the last 10 years worth of data, on average, 29% of corn ground revenue goes to land rent. On soybeans, it's a little higher. 39% of gross revenue goes to land rent. So at 350 corn at 150 bushel yield, at 29%, that is $152 per acre land rent. On soybeans, $9 beans at 39%, $140 per acre land rent. At $10 beans, that jumps to $156 per acre. Another thing to consider, landowners are able to take a lien position on growing crops. So the lien is against the growing crops. The lien amount is for the unpaid amount of rent. So what is a lien? A lien is a legal obligation to pay someone else. So if I buy a car and take out a loan, the bank has a lien on the title of the car. If I quit making my loan payments, the bank then comes in, repossesses the car, and with the lien, that's the authority that they can take back the car when I don't make payments. So the same thing in the farming world here. If the farmer isn't going to pay the landowner, this lien is the legal obligation that a farmer has to pay the landowner. I have had landowners tell me they file this lien every single year for peace of mind. It is fairly inexpensive. I believe it's under $50 to file this. As you see, it has to be perfected or secured by filing this UCC1 financing statement. You may want to get a lawyer, especially the first time you do this, and provide proper notice. You need to file this within 30 days of crops beginning to grow. So you can't file this come September 1st. Too late. You need to file this in the springtime, right when crops are planted. So it can be a good tool. I would say most farmland leases don't utilize this UCC1 financing statement, but I have talked with multiple landowners who file this every year just for peace of mind. Not a bad tool. It's an option that landowners have. I would make one argument. If you as a landowner are struggling to get paid by your farmer, it may be time at the end of the lease to get a new farmer to come in that'll pay you in a more timely fashion. I recommend putting a lease in writing just for legal, for clarity reasons, for both the landowner and the renter to understand the details. All agreements can be outlined and reviewed. It's a guide for heirs. I get phone calls, emails every single year from widows or children who inherited farmland from their parents or spouse, and they say, I have no idea what's going on with this land rental lease. What should be going, like they have no idea. If you have the lease in writing, it's a better guide for other family members to come up and follow along with. It should be signed and dated by both the farmer and the landowner. These are some things to improve or include with the lease: name, address of both the landowner and the farmer. Legal description of the land, right? The county has a parcel ID number for every parcel in every county. Just put that down. What is the beginning and end date of the lease? How long is this lease? Most leases are not very long. Most leases are 1, 2, 3 years in length. It is very common for the farmer to have a first right of refusal into the lease, meaning at the end of the 2-year lease, that farmer has first rights to rent it for the next year instead of going to someone else first. So that's very common to include. What are some of the rent details? What's the rent dollar amount, both per acre and just total, right? What does the total amount do? Does the farmer owe the landowner $10,000 a year? Well, it needs to be clearly spelled out. What are the due dates? Is it 100% paid April 1? Is it April 1, November 1 split? I have had landowners tell me that they want a check the first of every month. They want 12 checks every year. That helps in their retirement cash flow. What's the payment type? Is it cash? Is it check? Is it we're going to give you meat, right? We have cattle on the farm. We'll give you half a cow for land rent. As long as you can agree to that, there's nothing wrong with it. And then the last thing there, what happens if the payment is late? So if we have a late payment, is there a penalty? Does that terminate the lease? We need to have this discussion up front, because after the fact, it's really easy to kind of get angered over this and not have a level-headed conversation. Termination details. What's the end date? Right? Is it September 1st? December 1st is the end of the year, or the December 31st is the end of the year. What's the end date? Is it, after growing season 2025, 2026? What about notice requirements? How soon do you as a landowner need to tell the farmer that they don't get that field in the spring? Reimbursement considerations for fertilizer, tillage, or growing crops. Maybe that farmer applied fall fertilizer, did fall tillage with the thought process they were going to plant that in the spring. If now you tell them on December 1st you don't get that next year, they might want to get paid some for the fertilizer that they applied. Amendments and disputes. What happens if you do a 3-year lease and year 2 you want to change something, right? What's the procedure to initiate a change? Insurance. What about who's insuring the property? Who's insuring the crop? I said this morning that about 90 to 95% of corn and soybean acres have crop insurance. That's typically a farmer decision. The landowner usually doesn't really care about crop insurance. They don't get the benefit of that tool that farmers do. Some other things, landowners' rights. The biggest one here is hunting. If someone wants to hunt that parcel, does the landowner or the farmer need to be informed? I would make the argument that the landowner is probably the final decision maker, but if the farmer has standing crop in that field, they do have a right to know if someone's going to be out there, chasing deer or hunting goose or whatever they're hunting. So just keeping both parties in the know, I think is important. If that landowner wants to hunt that field the second weekend in November and they don't want the farmer combining then, they need to tell the farmer in advance. Most farmers want to rent the field multiple years in a row. They want this to be a long-term agreement and they're willing to work with you. The farmer wants to work with the landowner and keep these acres in their production. So they're willing to, accommodate your requests, but they need to know what those requests are. You can't tell them the day of and say, hey, you can't combine today. Say, hey, don't combine the second week in November, right? These aren't humongous demands. Farm bill programs, right? Is there a preference on federal farm programs? Typically, the landowner really has no say in that. They don't get the benefit of the farm bill programs. Management participation, the landowner may, for tax reasons, want to be considered a farmer to the IRS. If you want to partner with the farm, you need to tell them in advance. Again, if there's any legal statement or partnership intent as well. Are there preferred farming practices? Do you as a landowner want no-till to be used on your field? If so, the farmer needs to know that in advance. Not every farmer in the state utilizes a no-till operation, and with no-till, a farmer needs to buy a new planter. And maybe they're not willing to buy that new planter to help maintain that field. So they just need to be known in advance about some of these farming practices. Weed control, soil conservation. It's not uncommon for landowners to request soil samples to be done at the end of the farming lease to make sure that the farmer maintained proper soil health and NPK levels in terms of fertilizer that's in the soil. Improvements, the big ones here are tiling and irrigation. A farmer can tile rented ground. They would need the landowner's permission, but if a farmer pays to tile a field, they're going to want a long-term lease to capture that expense. If a landowner tiles a field, they're going to want probably a higher land rental payment to capture their expense in tiling that ground. But it can be done. It just needs to be an open conversation between both parties. And then a property map. I think it's important to highlight where the field is and where the appropriate driveway approaches are, just so that farmers aren't making their own driveway because that's where their equipment fits best. Just have that conversation on proper entrances to the field. And I know that writing a lease is important and just getting started is the most difficult. We have sample leases. So aglease101.org has sample leases on their website. They're like pre-drafted editable PDFs, and they are in their documents library on this website. Another helpful resource here is Iowa State has some farmland leases on their website. Very good starting points. Again, you can take these, edit them a little bit if you think that best fit your farm, but very good starting points for what a lease should look like. Kind of wrapping up here, but these are steps to negotiation, starting with solid research, right? Everybody on the call today is doing this solid research. The handout that I provided, my slides at the beginning had a lot of these accurate numbers for county average land rents. Clarify your goals. As a landowner, do you want always the highest dollar land rent? Or do you want the same farmer to maintain soil health and soil productivity? Those can be conflicting goals. So just clarify what you want to have on your land. You own the farmland. What's your goals with it down the road? Communicating clearly, I think, is very important. Make offers thoughtfully, showcase value, be flexible, compromise, put it in writing, right? Review the lease, have a legal or lawyer review it if desired. Foster a strong relationship. I highlighted that farmers, for the most part, want to keep these fields in their rotation year over year. They're willing to work with you and make a strong relationship. Review and adapt. So from the farmer's point of view, what is their ability to cover their direct expenses? And what's their land quality versus rental rate, right? Most farmers are renting more than one parcel. What is their price point per acre in comparison to what their expected yield is on those parcels, right? Do they have some higher yielding fields that they're paying more for or paying less for, right? So they can kind of do an internal comparison on the farm. What's the financial position of the farm? I've highlighted that 2025 farm incomes are below average. It's looking like 2026 farm incomes are going to be below average as well. Where's that farm at? Other income generating possibilities, maybe other options for farmers to increase revenue if that's their desired outcome. From the landowner's point of view, we want to make sure that they have the ability for their costs to be covered and their financial needs to be met. A lot of landowners use this land rental income as retirement income, right? This is part of their retirement plan, and we want to make sure that they're being treated fairly. I get phone calls every single year from landowners who, due to a death in the family, now took control of the land rental story. And a lot of these phone calls, they have not been getting adequate farmland rent. And that is not fair to the landowner to be getting paid substantially less than the county average for their land rent. So just keep that in mind. This needs to be fair to both sides. What's the strength of the tenant relationship? Have you been renting to the same farm family for 20 years and they've always paid on time, always done a good job with the soil health? That's worth a lot, right? Maintaining soil health is appreciating your farmland value, and that's important as a landowner. Quality of the agronomic care. Is that farmer doing a good job with the farm? And then lease options. This is another, like in terms of the negotiation process, this can be another way to edit things. Long-term versus short-term. Maybe you want to do a 10-year lease, right? You don't want to look for another farmer for the next decade. You just want to get paid, twice a year for the next 10 years and be done with it. Well, a long-term lease might be a good solution. A short-term lease, maybe you want to make sure your prices are adequate. You want to renew this lease every single year. You can add clauses to the agreement. Maybe you want the farmer to help maintain the fence lines, maintain cutting trees on the property line, mowing the ditches, plowing the snow. Maybe there's other things we can add. Maybe the farmer wants to rent the old machine shed on the property, and that's another source of income for the landowner. And maybe those flexible leases are a good outcome, right? There's other lease options that can help change the outcome or change some of the things within the lease, besides always adding or subtracting dollar amounts per acre. I want to highlight this is a negotiation process here. Negotiation skills are important. Win-win is the ideal outcome, right? The farmer wants this to be a long-term agreement, and most landowners want to work with the same farmer year over year if everything's going well. Write it down. Write down the lease. It's too simple not to write the lease down, and then prepare, engage, review. Both the farmer and the landowner need to be prepared. I do want to highlight, insist on using this objective, realistic, trustworthy data. I talked about the USDA data and the FinBin data a lot. Don't be relying on this coffee shop talk where numbers can very easily get exaggerated and kind of hyperbolized, and they're not always accurate. Using the county average yields, the prices that I've shared, everything that I shared is accurate, realistic data that I can verify. Coffee shop talk, always you have to take with a grain of salt. I have a list of resources here. So the University of Minnesota Extension website has a lot of this information ready to go 24/7. The FinBin database has this very accurate farm level data. The USDA website, the farmland sales, both the University of Minnesota Land Economics website and that ECRV through the state of Minnesota, the crop productivity map, that can be a helpful resource, the cost of production tool, the fair rent website, and then those lease examples that I shared there are very good resources, references for everybody using to use moving forward. All right, thank you for joining me this morning. Again, my contact information is on the screen here for everybody to send me an email or give me a phone call if you have questions moving forward. Thank you for joining me. Let me know if there's any questions.